So a few quick misinformation points here. So there was one tweet that talked about a dubious and unconfirmed investigation by the U.S. SEC into financial institutions for transacting with crypto. That has not been proven at any rigorous or reputable news source, including CoinDesk. As Ben was alluding to, there was an old tweet resurfaced from Reuters about India perhaps banning crypto. That's months-old news. That resurfaced. And then we even have news about Coinbase CEOs and execs dumping their shares immediately, supposedly, which of course was not true. And so we're going to hand that off to Zach to talk about Coinbase and this fake news that really kind of spun out of control over the last week.
Yes, this was another instance of fake news traveling quickly and widely on Twitter. A couple of reports on the internet were citing, we're kind of equating the Coinbase public listing to a classic ICO sort of dump on retail moment, and there was some laughing from the Twitterati about that. So to be clear, sort of the raw numbers here are quite staggering, right? Coinbase CEO Brian Armstrong did indeed sell $291 million worth of stock on opening day, as noted in SEC filings. The thing that got out of control here was that some misinterpretations of that data suggested that he had sold something like 70% of his shares, that the CFO had sold 100% of her shares, and other sort of striking comparative numbers such as that. So this was the thing that I got called in on Saturday to look into and to try to pin this one down. But it sort of it definitely sort of contributed to this narrative that Will had been alluding to over the weekend, and it certainly seemed like an interesting capstone to a major week in crypto news with the Coinbase public listing. I'll kick this to Naomi. I mean, from your perspective, right, this is how public listings work, right? People with the existing shares put them on the open market. They take a little bit of that cash off the table. They're compensated for their efforts over many years, and other investors can buy in. What was your take when you saw some of these weird proclamations going out on social media this weekend about some of these stock sales?
Well, I think it's important to first of all clarify for people that it wasn't 70% of his shares. It was
it was something like
1.7.
less than 2%.
It was like,
yeah, less than 2%.
Yeah, it was like a really small amount. But you're right. This is someone who's put everything into this company for the last however many years, and now he's finally created this liquidity event, which is this direct listing, and he's cashing some of it out. And nice, he should give him a pat himself on the back for the work he's done, and enjoy a nice yacht cruise, or I don't know, whatever people do with that amount of money. But it is interesting to look at this, because I think a lot of people conflate this with IPOs, which are not the same as direct listings. When you have an IPO, you are creating new shares, and you're allowing the public to buy in from these shares. That's creating a lot of money for these companies. So Coinbase isn't generating a bunch of money from their direct listing. They're not creating any new shares. What they're doing is just allowing the public to trade this, and what these shares that the public can now buy into all come from existing owners. So people are buying into Coinbase, but they're buying in and taking the shares that Brian Armstrong's selling, taking the shares that different VC firms who invested in it have selling. I mean, we heard last week as well from some of the investors and people asking them, so are you going to be selling your Coinbase shares? And their responses being like, absolutely not. I am not selling for this amount. I think this is going to go up. So I think a lot of people who invested in this are very bullish, but maybe some of them just want some of that quick liquidity, and they're selling small portions. I definitely don't think it's the giant saga that a lot of news outlets are making it out to be, like 70% of those shares. It's like, that didn't happen. That didn't happen. You had a small sell-off comparatively compared to how much these people are holding, and yeah, I think that things are still looking pretty strong for Coinbase right now.
Yeah, they mentioned, Coinbase itself mentioned, hey, we want to bring transparency to the crypto markets, and this is an example of transparency being misinterpreted. Again, some of these numbers are very interesting, right? Union Square Ventures, for one, had a $1.8 billion payday on Wednesday when they sold a portion of their holdings. So you just look at sort of these big numbers that get bandied around, I think, in Silicon Valley with venture capital investments, and then you see these major payouts, and you're like, oh, okay, I kind of get it now. This is what they're banking on. the whole time. So the fact that we're seeing this play out in real time, whether it's interpreted correctly is another question. You know, we do get to see it play out in real time. I think I saw Will and Ben, and I'll toss it to you guys.
Yeah, just really quick. It's interesting to see like the full completion of the cycle between Silicon Valley and New York, like West Coast to East Coast, seeing like how the tech kind of is brought up over there, and then it moves away across the country to like the finance centers, and all the people on the West Coast who are developing it are kind of getting paid out through the East Coast finance center. So I think over COVID, we've seen like a lot of decentralization, like cities don't matter as much as they used to. Everyone's on the internet. But when it comes to the biggest payout for the largest crypto exchange going public right now, or the largest US-based exchange going public, these cities still matter a lot. You have, you know, San Francisco and you have New York, and those names still matter, which is just interesting to see that kind of rehashed again here.
We'll see how much longer Silicon Valley matters for, though. Everyone seems to be leaving. Yeah. But sorry, Ben, I cut you off.
Yeah, no, I was just going to say really briefly, too. I think this kind of goes, you know, speaking about the ways that previously with all the misinformation, it's sort of like a broken version of the galaxy brain meme. I think this was maybe a little bit of a similar case in which people who might still be skeptical about crypto are trying to kind of cast aspersions on what's happening with this company because they are just skeptical of it as an entire proposition. So that is what I kind of pulled out a little bit here upon seeing how this was being portrayed.
Yeah, I can't believe that we still have to tell people not to believe everything they read on the internet, especially if you're new to the space. I think it's just important to remind everyone to do your own research and understand what you're getting into. I'll let you take a seat.
And avoid all caps tweets.
Indeed hard. Yes, refrain from engaging with all caps tweets. That's, well, except for the bootleg Bloomberg guy, Walter. Good times.